Hey guys, so the first coin I want to look at today is Hedera. The ticker for this is HBAR, and I'm currently on the weekly time frame. Okay, I analyzed this coin once before. There hasn't been a big change since then, as we've just been. It was 2 weeks ago, right? So I think when I first analyzed it, we were probably just back testing this downsloping previous resistance, now flip support. But I'll just recap a few new developments. Okay, so obviously, you have this. If you're going to trade Hedera, you want to draw this trend line, okay, this upsloping trend line, because we have 1, 2, 3, 4, 5 touches on it. So this is a very important line of support right now. This one's out of play. I just want to show you. Basically, we had this downsloping level of resistance right here. So we had multiple touches on it, and then we broke out. And when we broke out, we retested it multiple times. So we have a retest here. We kind of wick below it, but before the candle closed, we salvaged the body here. We came up, and then in the process of retesting this downsloping level of resistance, we formed another level of resistance, right? So the price would come up, get rejected, and it was kind of bouncing just between these two resistance levels here. So now that this one, we've kind of breached this, it's out of play right now. I mean, unless we dumped all the way back down, and it would not, it's not even an issue. So I can delete this one right now, and we've broken out of this one as well. So where we find ourselves, so we've broken this one. I'm going to keep this one in play, but there's another downsloping level of resistance right here. So you can connect 1, 2, 3. So we have 4 touches on this right now. So I would suggest the current in play downsloping level of resistance is this one right here. So draw this one on your chart if you want to trade HBAR. Okay, so yeah, we've broken out of here, and now we're just battling in between this range. So we have here, hold on. So between here, so the price is going to just kind of range between here, right? So if the price crashes down, we have support here, we have support here from the upsloping level of support, and then this is our resistance. So for a little while, I imagine just the price is going to just be in this tight little range. So you're not going to see big moves in this price. Well, keep in mind this is the weekly time frame, so the current price is about 5 cents, and we can come all the way down to around 3.9 and still be kind of in this safe zone where we don't really have to be too concerned. Okay, now for a positive development, basically just basic price action. See, we had this long downtrend, and then we had this really strong uptrend, and in the process of forming this, we created a higher high. So you see here, this is the level that we had to breach to change the trend. So we breached that. And then when we crashed down, we made a higher low. So higher high, higher low. So this is the initial phase of a new trend, right? So what I want to see happen is I want to break out of this downsloping resistance level, and that will be a very positive development. But if we can, once we do that, if we break this level right here, which is around just under 9 cents. I think I have it marked on this one. Okay, right here. 8 points. I want to see a weekly candle close above this level right here, and you could draw it on your chart. It's 0.0882. So if a weekly candle closes above this level, full on change of trend, and yeah, I think the next level. Well, I think the target is going to be quite high if we're able to close a weekly candle above this level. Okay, so until then, flip it back over here. Until then, we're just in this range, right? Nothing too crazy until this level breaks out. Then the first level of resistance is going to be right here at around 0.0731, and then the big one up here is going to be the price I just said, like around 0.088, around there. And you'll see why. Okay, I'll just draw it here just so you can see closer. I'll use a horizontal line, draw the top of the body, and then you'll see it was support right here. See, the candle bodies were fighting with it, and it served the support right here. And then it was a strong level of resistance right here. So obviously, if the price makes it back up to this level, if you're just a trader, you don't really care about HBAR, you can look for shorts. So essentially what you would do is you would take a short, and say if the price was right here and you noticed it was forming like doji candles, like something like this right here, and then the price would come up, but it would get sold back down. You see a doji, and then maybe you see some bearish divergence on the on the oscillators. I didn't mean to do that. So yeah, what you can do, you can enter a short position. You can place your stop loss just above here, right? And this is after you already get some wicks getting rejected, and then you're forming a doji right here. You can enter a short position, and then you can be very conservative with your target and just target the top of right here. So if you get rejected here, I think this is the bare minimum target, and this is around 0.0748, and this trade would give you a risk reward ratio of 1 to 2, about 1 to 2. So you're gonna, for every $1 you risk, you're gonna get potentially $2.22. It's okay. You're gonna have to risk $6, 6.62% to get it, and then you're gonna try to get 14.73%. You know, you have to risk more because it's on a weekly, but weekly time frame trades have a higher success rate. Okay, now if you wanted to take a trade, but you wanted to not risk that much and you wanted to do it on a shorter time frame, what you can do is go down to the hourly, and here's just an example. So right here, you would, I marked out the level of support in this shorter time frame range, and as you see, every time the price comes back into this range, it bounces off. And the last time it bounced off, we had a very good swing to the upside here, so it's a sign of strength. So if the price makes it back down to this range here, what you can do is you can enter a long position. You place your stop loss just below this previous wick right here, and then you target, a conservative target would be just the top of this range here. You don't have to target all the way up here. You have the previous day high here, but no, just conservatively, you can target right here. And this trade would get you a risk reward ratio of 1 to 6, meaning for every $1 you risk, you can potentially get $6 in return. And the actual numbers on that are, you would risk 0.39% to get 2.34% to the upside. And of course, that could be amplified with a little bit of leverage. So yeah, just to give you a potential trade opportunity on the shorter term time frame. Normally when I analyze these coins, I like to show you what's going on the macro. So if you notice, I always start on the weekly or the monthly time frame. I give you a macro analysis view about what to expect in the coming weeks and months. But I also like to give you a shorter term trade entry that you can consider. Of course, it's not financial advice, and yeah, trade at your own risk. Guys, if you're not subscribed and you want to get alerted when I release new TA videos, I'm going to be doing about 2 or 3 every single day. Just subscribe now, hit the bell, and then click on all, because this is a very new channel with a low subscriber count, and because of that, when you type certain coins in the search engine, we don't really come up. We're not prioritized. They're just going to show you the more established YouTubers with high subscriber counts, and they're doing all the crazy faces and the thumbnails and stuff. But yeah, that's not really what I'm about here. I just want to show you a good, clean technical analysis. Yeah, it's hopefully kind of helpful. All right, that about wraps it up for Hedera, and take care. Have a good day. Bye.